Namaste friends, welcome to GyanVeda channel. In this video we are going to learn about the equity linked saving schemes, or that is called ELSS. This will not only help you to save the tax but also help you to bring lots of wealth in the long run. Anyone visited the channel for the first time, I request you to please subscribe, like and share. Don't forget to press the bell icon so you will get lots of notifications going forward. Many times, income tax is a favorite subject for salaried personals or the businessmen. So please watch this video till end so you will get the complete details on how equity linked savings scheme can help you not only to save the tax but to generate the lots of wealth. If we see the amount being invested in ELSS schemes, this looks to be one of the preferred tax saving instrument for the Indian taxpayers. Let's take a quick look at the most popular tax saving options those are present in India. Many people believe that the ELSS can generate a good amount of income for them in addition to the tax saving. Many people choose to invest in Public Provident Fund PPF, then National Pension Scheme, after that Sukanya Samruddhi Yojana if you have a girl daughter. Then you have many ULIP options available in the market. We have traditional insurance policies with ELIC and many other insurance companies. There is a national savings certificate also available. This is very old investment scheme so far. Also, we use the housing loan repayment, the principal amount or the interest as a part of tax saving options. Also, there are many tax saving fixed deposit options also. In addition, there are so many different types of instruments available in the market for you to save the tax. When we specifically talk about the tax saving scheme, that is ELSS, this is nothing but a mutual fund, but it is open-ended fund. So you can start investing it at any point of time. Also, this is actively managed fund, not a passive like index fund. This is equity oriented. That's how it will help us as per the income tax section 80C that allows you to invest and save the tax. In addition, there will be a lock-in period of 3 years. Even if you invest in SIP or lump sum, it will consider that installment and it will be locked for 3 years from that time onwards. Why do people choose ELSS scheme? As this is a tax saving fund, it provides good amount of diversifications in your investment. This is equity oriented investment where minimum asset allocation in this mutual fund will be at the equity. It could be most of the times a flexi cap or multi cap investment. It has been time tested over the last several years. As of now, we have more than 1.25 crore investors who are believing in this instrument. ELSS funds may have most of the times a wide asset allocation. Most of it could be large cap, mid cap, small cap. These are the widely known. In addition, we have found few ELSS funds investing in microcap. Microcap are the companies which are even smaller than the small cap companies. So most of the times you will get advantage of multi-cap or flexi-cap fund. Sometimes some portion can be allocated in debt and other instruments, so it can happen like equity hybrid fund also. And there are other things also that can be allocated in remaining 35% of the equity allocation. Who are the right investor for which this ELSS fund stands good for? If you are an individual or Hindu undivided family, these investors are eligible to take benefit of ELSS. Many investors who are specifically looking for the tax saving objectives are the good investors for this ELSS fund. If you are okay to keep the fund with the lock-in period of the 3 years, this fund could be good for you. If you are young investors and you want to take advantage of tax saving as well as the equity return, these funds can opt for good. Also, these funds sometimes are categorized like high risk, Same time it will give you good amount of returns. What is the risk involved in ELSS mutual funds? As this is the equity linked market scheme, so you will have equity related risk as well. Many times there is a question whether the ELSS funds will outperform the index, that is the Nifty 50 or Sensex. Few of the funds are there who are outperforming this and some funds are even underperforming. As we know, the lock-in period of 3 years, some investors might treat it as a risk, but there is an opportunity to take a loan against this investment also. Sometimes it is available for 50 to 60% of your valuations. So if you want to have any questions on this one, please mention this in the comment box. If you invest under ELSS scheme, you will have some advantages or benefits like the income tax section 80C provides you the tax exemption for the amount up to 1,50,000. So depends on your income tax. Some investors might save little over 46k as per the current income tax slabs. So you can say if your income is higher, your investment is higher, then you might have greater tax saving options in ELSS. As this is a equity benefit, you might generate a good amount of return over the long term. There is a compounding factor as the fund is locked in for multiple years. Your fund's returns may get compounded and that will help you to create a wealth in the long term. Also, there is a no minimum or maximum limits for this investment. Minimum as such, whatever is the minimum amount of investment treated by the AMC, that will be your minimum investment amount. Also, if you compare the lock-in period for fixed deposit for NSC or NPS or PPF, this is having the least lock-in period. Also, you will get some benefit on your capital gain tax also. We'll get to know in subsequent video. What happens when you do the investment for a locked-in period? You will get some enough time to grow your money, and this might go under multiple cycles for certain stocks, so it will help them to generate the wealth over the long term. So there is a minimum time that you should give in the ALSS fund to grow your money. How will you try to find the best funds in this criteria of ELSS? There are some points that we can suggest. Always you should take a look at the historical returns provided by these funds. How long is the market presence for that specific scheme? How come the performance of the fund itself? What is the performance of this ELSS category and what is the performance of the index? You should compare all these factors whenever you are considering the historical returns. Also, you should consider the expense ratio. Low expense ratio doesn't mean the fund is best, but still, if the expense ratio is less, it will help you to add your returns in the long run. You should also check the CRISIL rank for this fund so that you will get some reliable opportunity. If the asset under management for any fund is higher, there are good amount of chances that your expense ratio will be less and the fund will be able to afford good fund managers for the research. Also, there are other performance factors which are considered like technical factors. There is alpha, beta, Sharpe ratio, etc. We are not going into much details of these factors in this video. Also, you should be able to take a the track record of this fund manager. Sometimes one fund manager is having multiple funds under him, so you can check a track record if this fund manager is able to meet the goal of that specific scheme. When we consider the performance of these ELSS funds for past 3 years, we found some amount of 15 funds in this list. We are not saying all these are best or other funds are not good, but just we could find these having the better returns for last 3 years. So these are from the known houses like SBI has many tax advantage funds, then Quant Tax Plan is there, Canara Robeco, Mira Asset also have the Bank of India, DSP, Union, Sundaram. There are many options available in the market. So now if we see the 5-year fund performances, again there is a list in front of you. If you want, just pause this video for a few seconds so you will be able to get the names. After that you will be able to find the best funds which suit to your target. Here friends, I want to highlight some things for your information. If see you are seeing here some funds from this Sundaram, these are micro cap. So definitely these funds are having the great amount of risk. If you are able to take the risk for the returns, these funds could be good for you. So can I go blindly that whichever funds have performed very well in past few years, shall I pick them directly? No. Before picking any fund, you should evaluate what is the risk you can take. What is the expected allocation you want to do in equity, and within equity how much you want in the large cap, mid cap, small cap, micro cap, and etc. Also, if the fund is able to generate the wealth consistently, that fund is better than many other choices. We have taken few sample funds for their performance comparison for last 5-year chart. Take a note that these are not recommendations, but we have just picked few funds. One is the Quant Tax Plan, then Nifty 50, then Canara Robeco, and Mira Assets. Here, if we have seen, all these three funds have outperformed the Nifty 50. Nifty 50 has little bit doubled the money little over 5 years, and these funds are given much higher returns than Nifty 50. What you want to do after the 3-year period, after the locking period is over? You have some choices. You can do the redemption, you can do a switch to other funds, or you can do rebalancing in your portfolio. There is a strategy that you should be able to adopt for the better returns going forward. What is the tax applicable for the return? We know that whatever amount is invested, we can use it for tax exemption. But what about the returns? As this is equity fund, it will be termed as a long-term capital gain. So you will need to pay 10% tax on the capital gain. There is no indexation benefit for the equity, but there is an exemption of 1 lakh rupee. We have a separate video on the tax treatment for the mutual funds. Please take a look at the channel. You can get these details in the I box or the description also. Before you invest in the ELSS funds, please evaluate certain strategical points. First, you should understand what is your risk ability. What is your tax saving goal? You should be able to invest it for minimum 5 years or more, so that you will give enough time for the fund to grow and create enough wealth for you. It is always best to split the investment into multiple installments like SIP for several months, or the STP if you have some lump sum amount now. It is better you make it throughout the year rather than just making it last 3 months. Most of the times what we see in the market, many people start investing in ELSS funds in Jan, Feb, March month of the every financial year. Instead, you should start it from the April itself, so you will get much better edge. You can do some diversification strategy also. Either you can choose multiple good ELSS funds to diversify your investment, or you can adopt certain other strategy. You should consider what is the tax application. We have some separate video also on tax treatment and how you will be able to save the tax. Also, it is better you get some study by yourself or hire some advisor, get some professional advice before you start investment. GyanVeda will certainly bring many such videos for your information, so please don't forget to subscribe, like, share. Press the bell icon so you will get notifications for our new videos. If you have any questions or comments, please use the comment box so you will be able to get new videos on this one. Happy investing. Thanks for watching.